Folks, welcome back to the Taylor Tax Show, the podcast that helps highly paid, highly taxed, high profile, high net worth, or ultra high net worth taxpayers save a bunch on your taxes legally and perennially, which is my favorite word. I'm
Indeed.
Terrence Taylor, the co-founder of Taylor Tax. This is Big Al. Say what's up, Big Al.
What's going on, everybody?
All right, Big Al is also a co-founder of Taylor Tax. We're both enrolled agents, as those of you who follow us know. Today, we want to talk to you about Donald Trump taxes. So think of this as an episode on Trump and taxes. What happens to taxes if Donald Trump wins? And more importantly, what does it mean and what does it imply for you, the taxpayer? And then Big Al, most importantly, so what? What should you do about it, if anything?
All day.
So that's the topic, folks. Let's get it. Big Al, kick us off. Tell us.
Yes, sir. Listen to me. There is so the reason we're this up right now is because we're in the middle of or right now at the time of recording I think day 4 of the Republican Convention, RNC. So this will be a timely, relevant topic to discuss if Donald Trump gets elected. What it look like in the tax sphere, especially for our clientele. And then, when it comes time for the DNC, we plan to release another podcast to talk about what Joe Biden is discussing. So with all that being said, let me share my screen with some of the highlights. And this information is coming from the taxfoundation.org. I'm not sure. Hopefully they're independent and unbiased, but anyway, so that's where it's coming from. So let's go over some of this. And Terrence, hop in with any other ideas that you might have or conversation that you might have. So now, first things first. First thing they mention is about business taxes. Donald Trump wants to lower the corporate income tax rate from 21% to 20%. And I think I've heard him on a podcast or two say something about potentially even lower that. So what's your view on that, Terrence? Lowering the corporate tax rate from 21 to 20%.
Yeah. So for those who are, business owners, this is great, right? Every percent that you don't pay in taxes is a percent of income that you can devote to growing your business, whether that's through investments, whether that's through projects, right? So it's all, any cut in taxes for a taxpayer tends to be a good thing. So I like that.
100%. Think about it. If you got $1 million of profit, that saves you 10 grand. That 10 grand can go a long way.
Yeah.
All right. Next, they don't have anything definitive on what he's proposing for this to go for capital gains and dividend taxes or deductions and exemptions, but jumping down to individual income taxes. Of course, with the Tax Cuts and Jobs Act of 2017, what he wants to do is to make that. So by making that permanent, what that means is we have this increased standard deduction, and a couple of other aspects that we have too. But it was hugely beneficial, especially to, I'll say, the middle class and middle income and middle to high income taxpayers. The next thing is he was considering, and Terrence put me up to game on this because I didn't even know it, but he was considering replacing the personal income taxes with increased tariffs. We're not going to talk about tariffs. That's not our thing, except for when those few times that we're going to be advising governments. But as of right now, imagine having no personal income taxes. Would that be crazy or what, man? Yeah. So with that being said, it would landscape, of course, of what we do, but there are several other taxes out there other than just federal income taxes. We've got state income taxes. We have excise taxes. We have estate taxes. We have gift taxes, et cetera, et cetera. So there's still taxes that you would need to plan out for, but that would change the landscape of of what we're used to here as Americans. Next, now I'm not sure how much this will impact our clientele, especially from what Terrence tells me, but he plans to exempt tips from income taxes. But most of our clients aren't working for tips, so makes sense. And other than that, once again, jumping into this tariff thing, because that's the way that he would suggest dissolving income taxes, personal income taxes altogether, is increasing or creating a universal baseline tariff on all U.S. imports up to like 10% of a tariff, and then 60% on imports from China. So, yeah, that's pretty much what we have or what we've know so far about what Donald Trump is proposing for taxes if he were to become president again next year. Back to you, Terrence.
Hey, Big Al, there are a few things that I noticed on here that I'm sure some audience members would find interesting.
Okay.
So if we go up to estate and wealth taxes,
Yeah.
right? So he plans to make those taxes and the cuts that he made to them in the Trump Job Cuts Act,
Yep.
TJCA 2017
Uh-huh.
tax bill that gave us all those tax cuts. He plans to make those tax cuts permanent, which is huge, right?
Definitely.
So he's the
Definitely.
one that raised the estate tax exemption up to 28.84 million
Correct.
if you are a married couple, right? So that's
Yep.
huge, right? So for the taxpayers that are highly paid, highly taxed, high net worth, especially ultra high net worth individuals, the estate and wealth tax is the tax cuts that he made there being permanent is absolutely huge. It will continue to be a
Definitely.
game changer, right? And then also he's for the individuals, he's also planning to make those cuts that he had made in 2017 permanent, right? And
Got
we
it.
know one of the benefits that we talk a lot about with our clients when you're looking at how to save a bunch on your taxes is the ability to invest in real estate, for example, and to be able to use the deductions that you can get from depreciation to reduce your rental income and therefore reduce the tax you pay on any rentals that you own.
Yeah.
And for those who are able to use the pass-through nature of taxes, that also then translates to you being able to reduce your personal taxes. So that's huge because that means that depreciation, bonus depreciation, is coming back. Now, we don't have enough details to know whether he's planning to reset that, right?
Yeah.
So, Big Al, I see you want to share some other stuff. You want to
No,
jump in?
just what you mentioned. So from the Tax Cuts and Jobs Act, with notable changes was the increase of the lifetime exemption, which you were mentioning, from 5.6 million to 11.18 million per individual, indexed for inflation, and then 27.22 million for married couples. So no, that is huge, just like you said. And
Mm-hmm.
if that is made permanent, then it won't expire or sunset after
Mm-hmm.
in the next year. So after 2025, I should say. So no, you
Yeah.
are correct. It is huge. It makes a huge impact on everything.
Yeah, and actually, thank you for sharing this, Big Al, because the numbers have been updated, right? So for 2024, the exemption has actually gone up from
Yeah,
12.92 million per individual to 13.61 million per individual. So taking
yeah,
us from 25.84 million for a married couple to 27.22 million for a married couple when it comes to estate taxes. And I mean, we can't underscore how huge this is. This is a game changer. This allows you to preserve the wealth that you've built. And if you structure your estate properly and you plan for your estate taxes properly, you could also make sure you're passing on the bulk of your estate after you pay estate taxes. And we have some strategies that we can talk about for those who are interested. Get in touch with us either at Terrence at tailoredtax.ai or Big Al at tailoredtax.ai. And for those who have estates that have assets valued over the exemption amount, we have a strategy for you through our strategic partnerships where you can make sure that you pay for your estate tax and you can do so in a very efficient way and potentially not even have to come out of pocket. But reach out if you're interested. All right, Big Al. So we've talked a bit about what Trump plans to do. What are the implications, and so what?
Yeah. Well, so here's the thing: is, of course, the implications are going to be sweeping across all taxpayers, but for people like you and I, and people for
Mm-hmm.
like our clients,
Mm-hmm.
here's the thing. We don't have a dog in this fight. We're not telling you, hey, Trump's the way or Biden's the way. What we
Mm-hmm.
know is that our
Mm-hmm.
strategies are the way to go where it concerns your income situations or your financial situation. Because
Mm-hmm.
I was telling Terrence before we started, recording this podcast, how I've always looked at it is that regardless of who gets into office, I already know how not to show income at its taxed rates. I already know how to legally shift my income and legally invest in real estate and businesses in such a measured approach and way, whether the taxes are 80% like they were in the late 70s and 80s, or they're as low as 20% or 15%, we can still make sure that you avoid them. Because once you start talking about making, having profits in the seven and eight figures, every percent counts, just like you mentioned before. So
Mm-hmm.
when every percent counts, that's just what it means. Every percent, we can figure out a way to help shift and move a lot of your activities legally to a more tax advantaged and more tax favored scenario. So
Mm-hmm.
make sure to reach out to us, and also check out Tax Strategies GG, because that could be one of your first points of contact, just to rummage through the AI some ideas or questions that you might have. Please feel
Mm-hmm.
free to contact Terrence or I at Big Al at TaylorTax.ai or Terrence at TaylorTax.ai for more detailed, more customized answers and advice. But
Yeah.
Terrence, it looked like you had something else too.
No, just to share again, Big Al, you mentioned this. I just want to amplify this, folks. If Donald Trump wins and he gets rid of tax, I'll be curious to know if he also plans to get rid of income tax for corporation or just individuals, right? It sounds like from what we read that it's more individuals, but who knows? If he gets rid of the income tax for individuals, some of you may be like, well, oops, there goes Terrence and Big Al's Taylor tax business. No, right? Big Al has already been very eloquent and clear. There's still a lot of other taxes that folks have to worry about, and that's where tax planning always is going to be helpful. And if
Yeah.
he just makes his tax cuts permanent, then you need people like Terrence and Big Al, tax strategists, to work with you to help you plan ahead so you can save up on your taxes perennially and legally. All right, folks, that's what we have time for today. Thank you so much for joining us, and we hope you have learned something about what Donald Trump potentially winning the election and becoming the 47th president of the United States mean for you and your taxes. All right, folks, see you soon.
Cheers.